around here. Yeah. Okay. So what, I mean, can you chat just for a second about these safe harbor? I mean, we have people who, listen to this podcast who are going to fall under that. Can you talk a little bit about the safe harbor stuff?
I'll talk safe harbor, and I'll give you a few cute things to know.
Right.
That are perfectly legal. Estimated tax payments are credited when you make the payment. And again, what an estimated tax payment is the government's attempt to get you to pay your tax throughout the course of the year, because the government said, we have our bills to pay continuously, so we want you to pay your tax bill throughout the year and not wait until April 15th. Well, if you are credited for your payments April 15th, June 15th, September 15th, and January 15th, you could find yourself in a world of hurt penalty-wise, because you could have $100 million refund and have payments for underpayment, have penalties for payment of underpayment of tax, because the penalties are computed on a quarterly basis. So the government says, that's great. You paid us September 15th. However, you earned your money in January and February. You should have paid it in March. Consequently, everyone fills out this penalty schedule, and you will pay the government penalties. The penalties are really akin to interest. Here's a cute way to minimize that. Payroll taxes are deemed to have been paid in ratably throughout the year. If you have your own business, if you have a corporation, and you were to take a bonus at the end of the year and withhold the entire bonus, that would be deemed to have been paid throughout the course of the year. So while you may have paid it December 31, you'll get credit as if it had been paid January, February, March, April, etc. And there's one other that I've used very successfully in the past. You find that you're in a horrific situation penalty-wise, and there's very little that you can do. Well, if you have an IRA account, take a withdrawal from the IRA, have them withhold a ton of the tax, whatever your shortfall is, and then pay it back within 60 days and pay back 100%. What'll happen is the amount that was withheld for tax will go into the government and is deemed withholding and is deemed to have been paid from January, February, March, the same as payroll. So it's a very good way to get withholding in and not be any worse off, because if you repay an IRA, a distribution within 60 days, it's not taxable. It's deemed a no harm, no foul situation. Nifty little things to know and use if you find yourself in that situation. There's one more thing I did not mention before, which I want to mention.